What's going on, everybody? It's your boy C-Zar, and we are talking about ARK today, A-R-K. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it. Okay, here we are. Oops, here we are. Sitting at 53 cents, 53.8 cents now. Having a little pump today. Up 24.9% as it stands today. I do want to say this is probably not an ideal time to buy, though I myself did buy some ARK at these prices. I think that it will come down a little bit. And I want to explain my theory behind that, right? So first off, looking at the daily RSI, very phenomenal. Very good looks here, right? We're bouncing right off the 50. The last time we bounced off the 50, it didn't merit anything. The time before that, it did. The time before that, it did. I would say, and even before that, it did. I would say, statistically speaking, we are likely to inevitably end up in the overbought zone. Now, let's just check if we go through. I know I'm talking about the upside here whenever I was just talking about the downside, but let's run with this for a second. If we just check what happens each time we bounced off the 50 here and went to the overbought zone, each single time we bounced off the 50 there and went to the overbought zone, what did the price look like? You know, it was very explosive for about a day. And then we pulled back. And what did we do? We actually, from a low to a high, pulled back to the 0.5 and inevitably to the golden ratio. Okay. Next overbought zone, we bounced from the 50. We got up here and we had one explosive day. The other days, you know, they're big coming up. You know, maybe the bottom day was pretty big too, but that was your biggest candle. As we got overbought, you topped off, right? So it was a very short-lived experience. And then from the high or the low to the high this time, instead of going to the golden ratio, you went there rather immediately. So that's a good area for support both times. That's good to know. You went all the way down and basically found a double bottom, where you then found a low and went up to your next high, which you bounced off your 50 on the RSI here. So we're going to measure this low to this high and see that you dropped all the way down to the 100 and actually saw some extensions afterwards. You actually started to taper off after that and went in a bit of a pronounced downtrend, you know, and maybe this would be the more appropriate fib to draw. I don't know. In which case, you did find support at the golden ratio a lot. Actually, I like this from a fib perspective more. I only drew it from this low to high because it was more relevant to the 50, to the oversold area on the RSI. I hope you can see what I'm talking about without the bubbles. I just feel like the bubbles help. Maybe they do, maybe they don't. But things are a little bit different here, right? A little bit lower than the golden ratio. And that time, that's why we might have gone down, is you were showing more weakness this time. I don't know. I'm just trying to rationalize it. So, but this time too, or this time, unlike the other times, it was a bit more sustained in growth, but you didn't have a blow off top. And I will say, being in the overbought zone this time did not prompt so much a selling response as it did a slow growth response, but inevitably you did sell off. Here we're overbought. Or not overbought, but we're looking to get overbought. Looking at the previous instances, when we get overbought, I would assume we see a rather explosive day. You know, we're at 25% on the day today, and that's the highest from an open to close body perspective. Being that we're not even in the overbought zone, it's, I think, feasible to expect that we could see something bigger than a 25% day, maybe something that's even a 40% day, something that sends us back to the tops here, and I think we'll get that. But I don't think it's today, and I don't think it's tomorrow. I think inevitably we will get that because, again, we are bouncing off the 50. We're more likely to go into the overbought zone than not. You know, here you're bouncing off the 50 a bunch of times, and you didn't go into the overbought zone. But I suspect this was during different kind of times, right? We were coming off of our highs from 2023. You know, coming down. Like, this is all part of the same kind of downtrend, really, from that, where here right now we're coming off, instead of coming down from a downtrend, right, with all these ones where we rejected the or where we bounced off the 50, went up a little bit, and then we didn't get into the overbought zone and then came down. All of those instances happened while we were in this downtrend. We are clearly not in a downtrend anymore. We're in an uptrend, higher lows and higher highs, at least relatively speaking. It's a different environment for the RSI. I personally don't expect a bunch of that stuff. I can't draw because the RSI is there. That stuff down there to happen. I don't think that we're going to bounce off the 50 and not get to the oversold zone. I think more likely this stuff is going to happen. This stuff where we're bouncing off the 50, even here, bouncing off the 50 and getting into the overbought zone, and that's during our uptrend, right? So just to put that in perspective, I really do think we're on track to hit this overbought zone, which will likely lead us to a bigger move than what we've seen from an open to close perspective already, okay? I want to be clear with that because now we're going to talk about the downside. Okay, so looking at the 4-hour RSI, we've got a high here and a lower high here, and you've just gotten into the overbought zone. Generally, and as we just saw, when you get into the overbought zone, that doesn't mean it's time to sell, but you're getting near that point to sell. Maybe, and not always. Don't think of it like that, but from what we just saw, a lot of the times that you got into the daily overbought zone, it wasn't too long lived, except for that very last instance where it was longer lived, but the growth was smaller. It was more of a crawl to the upside. The 4 hour here, you are in the overbought zone. Oops. And you're definitely not crawling. So I don't think you stop here. You got 32 minutes, 34 seconds left in this 4 hour candle. I mean, you could stop here for this 4 hour. I wouldn't be surprised if you grew more. But what I'm expecting is that this move here, let's see, 1, 2, 3, 4, 5, 6. I'm expecting the next candle, if not the next candle, within the next 3 candles, not including this candle, so 3 candles after this, or the very next candle itself, will close above this high in the 4 hour closing price. That will give you a higher or a lower high in the RSI, a higher high in the price, which would be good for a bearish divergence. That might be good for a momentary top. And not even, when I say top, I mean just an area to consolidate, right? Here we are tipping the golden ratio. We know how much we like the golden ratio, right? I'm not saying that we go above this. That's not what when I say we're going to grow from here, I don't mean we're going to go above this. That's not promised. We don't have to go above 58.5 cents. That might have been the high of the move. But what I am saying is that over between now, the next 31 minutes, and then the very next 4 hour candle, I'm expecting that you put in a high that closes just above this high. It could close above this. Maybe you close higher. Maybe you are above 60 cents, whatever. We saw a couple times, especially in the moment where you were turning the trend around and going to the downside, you ripped up to the 786. So maybe you do rip all the way up to the 786. You go to 64 cents or something like that. Maybe that's exactly what happens. But then you have that bearish divergence, and the divergence formed at this high where this price was. So wherever you top off, you're good to pull back through this price here. I don't know how much sense that makes, but let me just reiterate that. When it comes to bearish divergence, any divergence really, you have a lower high and you have a higher high. The objective would be, if you have a higher high and it's here, that the divergence is not taken care of, let's just say, until you go back below where the divergence started, right? You don't have to go back below. Generally, you just need to go there, but oftentimes you do go back below. So knowing that we're on a path right now that essentially is going to take us up and then back down, what would make the most sense for that path? If we take a relative high to a relative low, we're looking at the fibs. Well, we know that this thing likes the golden ratio, so I think it would make the most sense that you probably don't close above, or really even go above, 60.595 cents. But if you do, this would definitely be the area to stop you, 67 to 64 cents, somewhere in that zone. You would likely pull back to one of two areas. Now, again, I said you'd pull back to where this divergence started at a minimum, and oftentimes you do pull through that, right? Oftentimes, not every time. Don't treat that like it's a necessity. You could have bearish divergence and not pull back to where the divergence started. It happens in very bullish circumstances, right? We are in a very bullish environment now, to be completely fair. But what I am expecting, because it's more common, is that we find resistance in one of these two zones. If we find resistance in the golden ratio, which is what I'm expecting, we'll pull back either to the 0.5, which is just below this 4 hour close, or more likely, we'd pull back somewhere between the 0.5 and the 382, potentially bouncing off the 382. And that would be at 51 cents. So if you're looking to buy here at 53.9 cents, just, even if it goes up, likely we will get a chance to buy back at this exact same price, if not lower. So the best thing to do is either buy and then sell, like a short-term trade, or more likely the best thing to do is just wait, be patient, let it do its thing. If it does go all the way to the 786, 886, and it runs nonstop up there, I would expect still a major rejection that would take you back down to these same targets. Oftentimes, whenever you tear right through your golden ratio like that and you go up to your 786, 886 zone, it is met with a lot of volatility. This 886 rejection down to the 382, it's been happening all over the place, so don't be afraid if that happens. As well as the 786 down to the 236 rejection as well. Now, the 886 to 382 rejection, I've noticed it comes in a way like this, where we're on a 4 hour time frame, a daily time frame, whatever, where you wick up to it and then you close way low, right? It's as if you reject it off of that point. That that kind of look, where you get a big wick touching this, and then the body closes maybe below the 786 or even lower, something like that. Like, it looks like a significant wick, like these candles do. That would be very indicative that we do go to the 382. Same thing with the 786. If we top off, if we wick the 786 and close well below it, like back in the golden ratio or even below the golden ratio, if you reject that pretty hard, you're pretty pretty safe to think that you're going to go down to the 236, which is at 47 cents. Either way, 51. Why can't I talk? I'm a little sick. 51 to 47 cents is where I expect you're going to go after this little rally here. And we don't know where the high is now, but just for perspective, right, from a low to a high here, your golden ratio of this move, which again, you like your golden ratio, you're showing respect on it here, we've shown respect on it a bunch of times, even whenever you broke through it. Your golden ratio at this high would put you back down at 47 cents, which is the 236, which is a target that we've identified as acceptable here. Even from the golden ratio rejection here, you could go all the way down to the 236. It's less common, but it can happen, especially with a rejection like that and in a volatile moment like this. But if you go higher, like I'm suspecting you do, well, I mean, you don't actually technically need to go above this high. That really could be the high. But if you go to the 786 for a high, that golden ratio gets lifted up and it gets put right in the middle of this zone that we're expecting between the 382 and the 236. If you go up to the 886, that golden ratio is a bit closer to the 382, right? So anything and everything, whether it's here, whether you top off at the 786, whether you top off right here, there are several ways that we can make sense out of the 51 cents to 47 cent area. So all that to say, my friends, I think ARK is going up now, like right now. I think that the next 4 hour, I think you will get 7 4-hour candles green in a row, unless you're rejecting here. And you could reject here. It's just you're in the overbought zone. I wouldn't expect you to reject right here. I would expect you to continue, but you could. 1 hour time frame, I think you continue. I think you do. So I'm going to stick with it. I personally think that not this 4-hour candle, but the next 4-hour candle. Once you have 7 in a row from the low, 1, 2, 3, 4, 5, 6, 7, that's whenever I think you'll turn the beat around. If not, this very next candle within the next 3 candles, which would mean, right, because if this is 1 right here, 1, 2, 3, which would mean by the very beginning of the very first 4-hour candle of tomorrow, by the end of that candle, we should find a top, if not earlier, which would likely mean that tomorrow we're going to move down. Today we're moving up, tomorrow we're moving down. Okay, cool. And we're probably going to consolidate in this area. I know it doesn't look too right in this area, but if we go higher lows, lower highs, something, maybe a little bit higher than this, we could be in some kind of a triangle in which we are going to volatility. we're going to have a consolidation phase that's pretty volatile is what I would expect until we get to the nose where we likely break out, and then that's when we see this eruptive behavior that correlates with the daily RSI bouncing off the 50 and getting into the oversold zone or overbought zone. You do not have to make a straight shot up there. You can tomorrow have a red day, or even the next day have a red day and come back down and find support here, getting a higher low, right? That's okay. I'm not calling for anything too dramatic, and in fact, I would think, like this day here, that might be the biggest day, 10% to the downside on an open to close. That would be what I expect. But that 10% move down, it says it's 10% on an open to close, and it is. It seems so small, but really, from a high here to the low, you dropped 40%. You know what I mean? So the day itself, the red day that's coming, which I think will be tomorrow, it might only be like a 4 or 5% drop. But from the high, wherever it is, or maybe it's even a 10% drop from the high, if it's a little bit above this, that'll reflect more in an overall like 15 to 20% drop. Still volatile, just getting less volatile as we're winding up, getting ready to go higher. And when we do go higher, I expect a very quick snap, you guys, a very quick snap in the month of March that takes us all the way up here, at least to $1.82. But most likely we go, our minimum target truly would be something between about 291 and 341, somewhere in this area. The maximum target would be somewhere in this area. This target respectively gives us like a 10 to a 13x. This target respectively gives us around a 20x or more. This target here, I forget what that is. That's it's like a 6x, a 4x, 3x. It's a 3.5x. And that's your absolute ass minimum target. And I don't think truthfully, I would accept this or expect this as the minimum target more so. And if you don't like that, maybe we can go a little bit lower. Maybe, well, that's right at that low there. So I think you're going to break. I think you're going to break above that high. So that's out the window already. Maybe 254. Maybe that's where you stop, but I doubt it. I think you go. I probably would assume that you at least go here. Okay, wait. I thought that was a 10x. It's not. I'm remembering wrong. So many cryptos. That would be a 5 to a 6.5x. My bad. Up here would be a 13x to a 20x. That's what it is. Okay. Still, phenomenal growth at any rate, right? This is what I would accept as a minimum target. This is what I would accept as a maximum target. So anything between a 21x to a 4.75x is what I'm expecting for this thing between now and the end of March. I think that whenever you break out of this very massive consolidation phase here, it's going to promote a movement up like we haven't seen probably since the glory days back here, or even resemble something like this, but probably bigger than this even. So I think we're overdue for some kind of pump. Again, do your own research on these coins. Make sure that you understand what the coin does before you just invest into it. I do think, again, it's worth mentioning that they haven't really been developing, or at least to my knowledge, it doesn't seem like they've done any updates for the last like 3 years, literally. So just be aware of that. That's not encouraging, but they did get listed on Binance back in 2023, end of 2023. So a year and a half ago, they got listed on Binance during this bull market. I'm assuming there's something going on behind the closed doors, and whenever this thing breaks, we're probably going to get some bullish news, some really bullish news, some development news or something like that that's going to lead this thing to be a top performer probably in March. That's what I'm expecting. So that's all I got for you guys. If you liked the video, hit the like button, subscribe if you want to see more content like this. Thank you all for being here. I'll see you on the next one. Bye.